Let's put the spotlight on Ujjivan Small Finance Bank, because this time in Q4 of FY24, the company has reported a jump of 26% on its NII, as well as the net profit saw a jump of 7% on a quarter-on-quarter basis. So let's understand more on the financials and the outlook going ahead. And for this, we are being joined by Ittira Davis, who is the MD of Ujjivan Small Finance Bank. Hi, very good morning, Mr. Davis, and thank you so much for joining us today on ET Now. First of all, wanted to begin with the quarterly results. If we look at the NPA ratios, they have been going down like at least the last 8 quarters, but we do see an uptick this particular quarter. And also a credit cost for the quarter has increased. So just wanted to understand that do you see any initial signs of stress in your portfolio, and what is the outlook going ahead?
Good morning, Shrishti. Yes, I think that's a very good question. The NPA is the focus of most bank earnings. For us, we have, as you rightly said, it's the GNPA has gone down to 2.1% and NNPA is 0.3%. During the fourth quarter, there was a slight uptick, and that is, after several quarters of coming down, there are shifts in the market, and we have responded to that. And the market signs, the industry is also facing some amount of stress, but something that we'll have to see how it plays out in the next couple of quarters. Now, we are well positioned because of what we have done in the past, and also the actions that we take in advance of getting to know about these stress situations. So we are watching carefully, and there are a couple of pockets which we are seeing stress, but nothing to be alarmed of at the moment. And we believe that it is something that can be managed in the current situation. Nothing like that, nothing like what we had during the COVID times.
Good morning, Mr. Davis. This is Shailasa joining in the conversation. If you could, is there anything more that you can share on the segments that you said that you are seeing stress at this point in time, or will it be too premature for you to talk about it?
No, there have been some cases in the Punjab, Haryana area, which was, people had stopped repayments for whatever reasons. But we believe all that will come back, into normal in the second quarter. And there is also a couple of areas where we have found that there is a bit of overlending or overborrowing, depending on how you want to put it. That is in the south, in Kerala and southern part of Tamil Nadu. But, these are things which happen from time to time in the lending business. You have to manage it. And that is something that we are doing. So that is as far as we are concerned. And I suppose to some extent, the industry is also facing similar things in these areas. So as a group, as an industry, we are managing some of these things. But let's see how it plays out. And we believe by second quarter, things will return to normal in most of these areas.
All right. Mr. Davis, if we see your numbers, then NIMs have shown a healthy improvement sequentially, and your FY25 guidance is above 9% for the NIMs. Now, the cost of funds for the bank has also gone down in Q4, mainly owing to the completion of the reverse merger. So how do you expect your cost of funds to shape up going ahead?
Yeah, I think, managing the cost of funds in this current environment is an interesting thing to do, because everybody was waiting for a decline in interest rates from the RBI and from the regulators. But that has now been delayed, possibly till the last quarter of the current financial year. Having said that, we have in the last quarter benefited to a little, about 17 basis points from the reverse merger in terms of the NIM. But most of it has come by better liquidity management and also by looking at cheaper sources of funds. So we will continue to look at that as a way to keep NIMs at around the 9% for the current financial year. And we believe that is quite doable in the current scenario.
Right. There are 30% of the book is secured now. And if I'm not wrong, this will actually go up to 40% or so by FY26. Do you think that the yield on advances would moderate a little as we move forward towards that target?
You're absolutely right. A secured book has got a little bit of a lower yield. But we believe that, using refinancing and other sources of funding, we'll be able to keep the net interest margin intact. But yes, net, there will be some reduction as we go forward and as the secured book increases.
All right, Mr. David, now let's talk about the RBI guidelines on the transition of the small finance bank to the universal bank. You have managed to maintain the NPAs at a low level. What are your thoughts, and has there been any talks internally for you to move towards being a universal bank?
I think the RBI did very well to give us the guidelines. Earlier, it said if you were, if you had completed 5 years as a small finance bank, you were eligible. But this outline of providing, the checklist is fantastic. It gives us a roadmap and it's much clearer. Now, as far as Ujjivan is concerned, we meet all the conditions, and we will be looking at this possibility of conversion during the current year. We have just finished the reverse merger. In fact, the new shares will start trading this week. But with that behind us, the board will take up the eligibility and other things about the universal bank, and I think the right decisions will be taken as to timing and other things going forward. So watch this space. Perhaps in the second or third quarter, we'll be able to tell you a little bit more about it.
Third quarter is when we can at least get a proper timeline, hopefully, from you when you talk about that particular development on universal bank. But you are hopeful at least FY25 it should be?
FY25 we'll have a decision, but the process will take a little longer. So I think if it is decided to move ahead, we can start the process this year, and then the RBI will have to take a decision possibly in the next year or so, because they will look at all sorts of eligibility conditions, discussions. So that is a process which is still new. Nobody has done the transition as yet. So whether it will take 3 months, 6 months, we don't have any idea. But once the application goes in, there is a process that RBI follows.
We spoke about the reverse merger. So apart from the positive impact of cost of funds, what other benefits should investors actually expect out of the reverse merger once it's completed? And also, are there any other levers to play out?
Well, I think, two companies having the same operating, company didn't make sense, because two sets of shareholders. But, going forward, we'll have all the shareholders supporting the bank directly, which initially means that we'll have a lot more retail investors coming into play. That obviously means, greater, the share in the market will be much larger, which should help trading. And in the long run, we believe that, what is right now about 33% institutional investors, we can take that a little further up so that there is a good mix between retail and institutional investors. But other than that, there is, the reverse merger does not have any other implications. And we believe that, there will be a good amount of shares into the market as a result of it.
All right, Mr. Davis, with this, we'll let you go on that. Thank you so much for joining us today on ET Now and helping us understand more about your quarter gone by, as well as sharing your outlook for the upcoming quarters. Thank you so much for joining us. But with this, viewers, let's move.
If you like this video, then like, share and subscribe to ET Now.